Hey, what's going on? Scott Taylor with SanDiegoRealEstateHunter.com. In this video, I want to break down what happened earlier this week. As I film this, it's Friday. It happened Wednesday, no shocker, after hours, but I have bad news for you. It's going to cost anybody who's looking to do a conventional refinance loan up to $700,000, up to $3,500 right now in fees, and I predict that it's going to go to purchase loans and every other loan very soon. Have you heard of the agency adverse market adjuster, right? That's hard to say. I suspect not, but it's so important that I want to do a quick video and post about it right now. The last San Diego mortgage alert I did is when rates were dropped literally overnight, more than half a point, something I hadn't seen in a long time, and now I wanted to film this. Of course, if you find value from this video, I'd really appreciate if you would smash that like button, subscribe to get more hard-hitting videos like this, and tap that notification bell so you know exactly when a new video is released, okay? So without further ado, let's jump into what the agency adverse market adjuster is. So late Wednesday afternoon, the mortgage giants Fannie Mae and Freddie Mac, right? Don't forget, I have always said the United States real estate market is the world's largest socialized real estate market because most of the loans are backed by taxpayers such as Fannie Mae and Freddie Mac. They announced that they're raising fees for all lenders, aka for you if you're a borrower, on all conventional loan refinances. And they did it Wednesday after hours. And guess what? It went into effect immediately. So if you already locked your loan, you didn't have to worry about it. It actually goes into effect September 1st. But of course, as soon as this came out, all mortgage lenders that I know of, wholesale mortgage lenders in the state of California, had this go into effect immediately, okay? So the price adjustment on this, and I'm gonna break it down, the price adjustment on this is 0.5% of the loan amount for the cost of the loan, okay? And you're like, 0.5%, like who really cares? If you have 100%, then you have 1%, right? That's 1%, but we're at 0.5%. But let me break down for you exactly how much this is. And you can look below the video, as always, for show notes, details about what I'm talking about, some numbers, and some links to things that I'm talking about. So if you have $300,000 conventional loan refinance right now, times 0.5%, cost you $1,500 just like that. $400,000 is $2,000. $500,000 is $2,500. $600,000 is $3,000, and $700,000 is $3,500. Now, don't forget, we can go up to that $701,500 loan amount in San Diego. So let's just assume it was $700,000 refinance, right? You have a new fee. Thank you so much, government. We really appreciate you. For 0.5% on $700,000, that's $3,500 just like that, okay? And that's immediately moving forward. So why did they do that? This is something that I've talked about for a long period of time. When there are risks in the market, things like COVID-19 right now, right? This pandemic, whether it's real, fake, or contrived, it's been going on. We don't know if we're at the start, the middle, the end. We don't know if we're soon going to be locked in our homes with needles pushed into our arms, but that has led to record lockdowns, right? It was supposed to be 2 weeks. Now in California and San Diego, we're going on 5 months? I'm filming this mid-August, since mid to late March. And of course, because of these things, obviously, record high unemployment, okay? So when things like that happen, when costs go up, what happens? Banks control everything. Banks print the money out of thin air. If they can find any way to make more money, they will. Obviously, with what's going on, they're foreseeing there might be some turbulence in the market. So they're saying, hey, we're going to do this right now. So currently, it's just for the Fannie Mae and Freddie Mac refinances, like I said, as a for instance, the conventional loan refinances, right? That's it. But what happens? Much like personal property taxes, the Federal Reserve Act was enacted in 1913 unconstitutionally over a Christmas break. What happened? In 1916, unconstitutionally, they needed something besides that, right? What did they need? They needed to put on personal income taxes as collateral to print that money out of thin air. From there, it started to basically personally taxing nobody to the end of or at the start of World War II, having the World War II tax or the freedom tax or whatever it was called. And that's when people first started paying personal income taxes. And that's when it was first actually taken out of W-2 employees from their paychecks, not until about World War II. What's happened since then? Well, taxes have only gone up. Why am I bringing that up? Because this is just the first thing. The first thing is, well, rates are so far down. People are getting great deals. So many people right now are refinancing. Numbers are way up. Boom. We know a great way to take some of that cash, and we're going to do it. So what's going to happen from here? I bet it's going to go into probably the conventional purchase loans, right? It's for sure going to go over to things like the FHA, USDA, VA, down payment assistance loans. And don't forget, look below the video. There's links. Down payment assistance, very simple. You get a loan to cover your down payment, then you either get an FHA or conventional loan, and then we have a loan covering part of your closing cost, okay? Potentially, that could affect that, right? The USDA loan, backed by taxpayers, right? That's, if you buy in the countryside, you can get in zero down, some of the lowest rates, and some of the lowest mortgage insurance every single month. It could definitely start affecting that on purchases and refinances. Veterans, a VA loan. If you used to be in the military or you are now, you can buy zero down, extremely low rates, and no mortgage insurance every month. So whether you're looking for a purchase or a refi, I suspect this will come down very, very quickly overnight to where that could get hit. And finally, an FHA loan, right? If you want to put down as low as 3.5%, buy up to about a $725,000 purchase price and get extremely, extremely low rates, guess what? It's probably going to affect that as well, the purchase and the refinances. It might start with the refinances first and then go to purchases, but I promise, I'm sure that's on the back burner or on the front burner if we're already doing it for Fannie Mae and Freddie Mac products. So what should you do now? Here's some thoughts. If you've been on the fence as far as a refinance, whether to simply drop your mortgage rate or get cash out, do that now. This is something that I talk about over and over and over. People always think that they can time the mortgage markets or they're smarter than somebody else. Guess what? If you thought rates were trending down, did you see this one coming? Probably not. So waiting all these past months or past years or try to time, all of that went out the window when you got hit with that 0.5% fee. Now it doesn't matter. What you want to do is you want to submit your loan application with scottsloanapp.com. We want to get in your documents. We want to pull your credit and we want to lock your rate as soon as possible. So once we're locked, they can't change anything on us. And if you've been on the fence about buying a home, especially, right, if you're looking to get a mortgage loan, I would act sooner rather than later. In a recent video to you, the San Diego housing trends, I mentioned, right, many things that are coming into fruition, that there's lower and lower inventories. We're down over 80% since 2005. I'm out looking with clients, especially on weekends, 3, 4, 5 times a week. And we are seeing low inventories and some of the lower price points for homes. People just don't simply like them. To be blunt, they don't like the quality of the house. They don't like the locations, okay? We're winding down summer, right? Once again, we're in mid-August. What's going to happen in San Diego? Kids are going back in school. And what are they doing for school? They're all being home taught, right? They're all being home taught. So you're teaching them at home. We're entering in the next phase of COVID-19. We have less than 3 months till the elections. We know that this will be easily the most volatile election in our lifetimes, no question. And they're already paving the road that the elections will go through the end of the year. So that's going to mean that inventory is going to become less and less and less. So unless you're going to get out and buy something right now, right, whether you're refinancing, which you can do at any time, but it's obviously always better to do it when rates are trending down. But if you're looking to buy something, do that sooner rather than later. There won't be any more inventory, figuratively speaking. Anybody looking at real estate knows that. And then you're going to have to sit on the sidelines. I guarantee very few people will want to sell their home after school starts. And in September, October, do you think anybody in November and December, when this election is in the courts, is going to want to be selling? No. What are you going to be doing in the meantime if you're renting? paying higher rents, right? Prices are going to go up. Inventory is going to go down. All of your money, instead of putting your rent money to your buying something and paying down your mortgage, getting appreciation, probably taking advantage of extremely low rates, not having to worry about evictions, not having to worry about all your fellow tenants not paying rent because they don't have to, you can get into something and save your time. That's it. Thank you so much for watching the video. Once again, if you liked it, if you found value, I'd really appreciate you smash that like button, subscribe to get more videos, tap the notification bell so you never miss a video. And of course, I'm licensed to do real estate. I'm licensed to do loans. One-stop shop if you were a buyer. I would love to help you refinance your mortgage, help you find real estate and get a mortgage loan. As always, shoot me a call, email, or text, and I look forward to chatting with you and helping you sometime soon.